Now, the Nigerian debt capital market is increasingly becoming a viable source of long-term funding for both corporates and governments. There have been recent listings from Flour Mills of Nigeria, Primero PRT, FBN Quest Merchant Bank, as well as the federal government. But let's find out what's driving this development with the head listing business division at the Nigerian Stock Exchange, Olumide Bolumole. Good morning, Olumide. Thank you for joining us on the program. But tell us, what's the reason for this rising interest in the Nigerian debt capital market?
Good morning, and thanks for having me. Your points are very valid, and indeed, we've seen a lot of appetite from issuers to come to the market to issue bonds, some of which you mentioned. I think the key catalyst for it really is the prevailing rate environment. Previously, we saw federal government instruments trading around 15%, 16%, 14% on a yield basis. But right now, if you look at instruments that are trading up to a 7 to 8 year maturity, we're seeing yields of less than 10%, sometimes 8%. So with that backdrop, it makes for a more attractive issuance proposition for some of the companies that are coming to market to issue bonds.
Last week, we saw the listing of Dangote Cements' 100 billion naira bond on the Nigerian Stock Exchange. Of course, it boosted the outstanding non-sovereign bonds to the 1 trillion naira mark. What signal does this send to the market, and how have investors reacted to the listing?
Well, so very positive, actually. Beyond Dangote Cement and some of the other issuers that you mentioned, the federal government itself has also been quite active in the issuance market. There was a sukuk that was issued a few weeks ago, and that was oversubscribed, as the Dangote Cement bond was oversubscribed. There is a lot of appetite from the investing universe, largely because there is a lot of liquidity out there in the market, and there isn't as much opportunity. So we see that there's a strong interest for investors to find the right kind of issuer with the right risk profile, with the right pricing, for them to invest in those in that particular asset. But beyond the fixed income asset class, we are a multi-instrument exchange. And what we find is that even in the mutual fund space, we've also seen some capital move into that space as well. But yeah, indeed, there is a lot of appetite for the right kind of issuer at the right kind of price.
Now, what effects do you expect COVID-19 to have on new listings in the near term?
It's a good question. Right now, the way we see things is we are a platform to enable issuers to raise capital and for investors to deploy capital. COVID-19 is, we've seen it have a significant impact on the economy overall as things have slowed down in general. But it's affected businesses in many different ways, and it's materially affected businesses that we term person-on-person businesses. But indeed, businesses would have to adjust and perhaps rethink their business strategies in view of the present realities. So we've seen companies take on a more logistic-driven approach to client engagement, and also more technology solutions around serving their customers. In order to achieve these things, companies would actually need capital. So, and that kind of supports what we're seeing from a debt capital raising, where companies are taking advantage of the present realities and learning that they need to modify their business models, and one of the things they need to do that is capital, and that's one of the reasons why we're seeing the level of appetite from an insurance perspective. But indeed, I think what companies would likely be doing, and some of them are doing, is really rethink their strategic plans, rethink and critically look at what the requirements of those strategic plans are, one of which may be capital, and then finding the right form, the right size, the right tenure, the right structure of that capital, and coming to the platform of the exchange to raise that capital.
What are some of the ways that you're working with regulatory bodies and other players to create a more enabling environment for capital raise during and post COVID-19?
Yeah, so at the beginning of the COVID-19 pandemic, when there was the initial lockdown, the Nigerian Stock Exchange worked with a number of policymakers, and we continue to work with a number of policymakers and indeed regulators to just try to understand some of the pain points of players in our ecosystem, from dealing members to listed companies to investors. And one early one that we saw was around how AGMs would be implemented. And working with the CAC came up with guidelines which allowed and created a framework for having an AGM in a lockdown, in a social distancing scenario. But beyond that, we continue to have engagements with the SEC. We've had rules where we've extended timelines for companies releasing their annual reports, just to take cognizance of the challenges of the environment. So we're very supportive of that. But on the technology side, one of the things that we've spent a lot of work on is the NSE's digitization process. I mean, it's not a process we started now. We've done it for many years. And indeed, we're, I think, reaping some of the benefits of that process right now. But one of the things that we've looked at, and we are currently in the final stages of putting together with the support of the SEC, is our electronic IPO process. Because previously, as you know, the IPO process was usually letter and paper driven. But we've designed and implemented a fully digital process that will support our various issuers in their bid to raise capital, and also make the process a lot easier and a lot more user-friendly for investors. And it should really deepen and broaden the scope of investors participating in the market. So those are just a few things of how we're engaging, just to be more supportive of the market and really taking cognizance of the present realities.
Now, the NSE has recorded significant increases in turnover when compared with June 2019 numbers. Now, what would you say is responsible for the activity we've consistently seen in the market?
Well, I mean, it's a good point you raise. One of the things that we're very proud of is the breadth of our investor universe. We have international investors, domestic institutional investors, and retail investors. And one of the things that we've seen pre and post COVID is pre-COVID, international investors typically were around 60% of the average daily turnover on the market, and the local investor being 40% of that, split 50-50 between retail and institutional largely. Post-COVID, what we've seen is that flip has changed, where the participation is more dominated by local players with 60% of the turnover, with internationals playing around 40% of that. And we really believe that the growth in turnover, it really speaks to the resilience of the diversity rather of the universe of investors that play in the market, where one class of investor decides to, I guess, reduce their participation, another investor actually picks that up, such that, as you mentioned, the turnover this year, year-to-date basis, is actually higher than the turnover last year. I think it's about 10% higher.
Okay, Head List and Business Division at the Nigerian Stock Exchange, Olumide Bolumole, thanks for speaking with us on the program.
Thanks for having me.